Good evening. This is Ginger Garvey, and we are on lesson 2 in the intermediate section for tax topics. We're talking about credits, and in this particular lesson, we're going to be reviewing the child tax credit. So this is the full series. The child tax credit is the second lesson after a credit overview. You can find the others on our YouTube channel at Freedom Financial Partners. Going deeper into the tax credits, we're going to be reviewing the child tax credit specifically, and by the end of this lesson, you should know how to figure and report the child tax credit. The child tax credit is actually a non-refundable credit, and it is reported on line 52 and on the 1040, and it's up to $1,000 per qualifying child. This was made permanent as part of the PATH Act that was passed earlier this year, and you should expect this $1,000 per qualifying child to stay in effect until there's a major change into the tax code. If you cannot use the entire amount of the credit on line 52, you do not owe as much in taxes as you are eligible to receive. You may be eligible to take the refundable credit, the additional child tax credit. That is using Schedule 8812 and is handled on line 67 of the Form 1040, and there will be another lesson specifically dealing with the additional child tax credit. The child tax credit, the qualifying child would meet the same requirements as a qualifying child previously, and more specifically, they need to be under the age of 17. So I'm going to go through how the qualifying child lines up with the child tax credit. First, they did not provide over half of their support for the year. Second, it must be a son, daughter, grandchild, eligible foster child. That relationship must be close. This is not just a dependent. It must be someone that has that close biological or legal relationship. And of course, always adopted children are treated as if they were a biological child. The third requirement is this child must be a citizen or resident of the United States. So for the child tax credit, remember we said we could claim dependents that lived in Mexico and Canada as part of NAFTA. For the child tax credit, that child must actually be a resident of the United States. They need to be under age 17 on the last day of the tax year. They also must be claimed on the tax return that is claiming the credit. So for this particular child tax credit, you must claim the dependent. They also need to have lived with you for more than half the year, except as we've discussed before, in the instance where you have divorced or separated parents and the non-custodial parent, the parent that the child does not live with for more than half the year, is going to claim the child, and the custodial parent is going to allow that. So that's what this asterisk is for here on number 6. Also, there's another requirement that for the child tax credit, they must be younger than the taxpayer and not filing a joint return. So you have a couple of new things with the child tax credit. One, they need to be a citizen of the United States. 2, they need to be under the age of 17. Also, they must be younger than the taxpayer or the spouse if married filing jointly, as well as for this particular credit, it must be claimed as a dependent on the return. So we're going to go through some examples here. Here's where it shows the line 52. Jay and Tracy have 3 children. 2 are qualifying children and are eligible to take the child tax credit of $1,000 each. So that gives them a total potential credit of $2,000. Their tax on line 47 is $780. So since they only have $780 of taxes owed, the child tax credit would be $780. They would not get the additional $1,220 unless they're able to claim part or all of it as an additional child tax credit. And as I said, we'll go through the forms for that in a future lesson. Here's another scenario. Jay and Tracy have 2 sons and a daughter as dependents. Susie was 6, Andy was 16, and Jamie was 17. Which dependents would be qualifying child for the child tax credit? And what we're really looking at here is the age. So Susie is 6, Andy is 16, and Jamie is 17. So in this case, only Susie and Andy would be able to be dependents because Jamie was not under the age of 17 at the end of the tax year. Nicole is age 11 and lives with her father, George. George has signed a written declaration that he will not claim the exemption for Nicole. Will Nicole be a qualifying child for the child tax credit for George? In this instance, no, because Nicole will be the qualifying child on her mother's return, and her mother will receive the credit. So even though George is the custodial parent, because he is not claiming the exemption, it says here he will not claim the exemption. So when he chooses not to claim the exemption, he does not get the credit. So the child tax credit requirements is that you must claim the exemption for the child. You need to provide a valid tax ID. It can be an I-10 or an A-10, as well as indicate the relationship to you. And the child must be under the age of 17 and they must live in the United States. We're going to add those. Under age 17 at the end of the tax year and live in the United States. Okay. Child tax credit, to figure the credit, the first thing that you're going to do is reduce the amount of the credit if the tax liability is less than the credit, or if the modified AGI is above the amount allowed. So the numbers for 2016 modified married filing jointly, if your modified AGI is over 110,000, you could see the credit will phase out. If you are head of household, qualifying widow, or single, it's over 75,000, and married filing separately, it's over 55,000. So to claim the credit, what we would do is file a 1040 or a 1040A. This credit is not available on the 1040EZ. You're going to provide the child's social security number in the exemption section. We're going to complete the child tax credit worksheet. Schedule 8812 Part 1 must be completed for every child being claimed that has an I-10. So that's a new requirement. So looking again at another example, we've got Harold and Donna. They're married and filing a joint return. They have 4 children under the age of 17. In 2016, Harold and Donna have a modified AGI of 108,498. Is their modified AGI under the phase-out threshold? And in this case, yes, it is under. And depending on their tax, they are entitled to the full credit of up to $4,000 on line 52. So the information coming from this particular lesson can be found in publication 17 in chapter 32. If you have any additional questions, you can find out more information on our website at freedomfinancialpartnersllc.com. For the most part, you're going to find information relevant to the tax school under resources. Please like and follow us, and we look forward to hearing from you.